I'm Oren Lieberman in Jerusalem, and this is CNN.
Closing bell ringing on Wall Street. Been a down day for the markets. They're off the lows of the session, but as you can see, or you'll see when we show you the final numbers, it's not been an encouraging day for the financial system. And that's three good gavels bringing trading to a close today, Wednesday, August the 15th. Tonight, stock markets are sinking. It's a cocktail of risk, and we'll tell you what's actually within it. We'll be live at the New York Stock Exchange. Qatar rides to the rescue with a $15 billion rescue for Turkey. And they're crazy, they're rich, and they're Asians, and that's not me. That's the name of the film. I'll speak to the author of Hollywood's newest diverse blockbuster. I'm Richard Gress, live in London, where, of course, I'm in business. We begin tonight with the global markets and the sell-off. It seems to be almost a perfect storm of Turkey, trade and tech. And how they all interrelate is sending the market sharply lower. Let me show you exactly what I mean. Now, the Dow is off 137. It's still ticking over the last few points after the close, off half a percentage point. We had been down around 320 or so at 11 o'clock in the morning, and there was an afternoon rally. And then, as you can see, the market has well come off its lows towards the end of the session. But the big components are what dragged the Dow down. For example, Boeing was off 3.1%. Boeing's 9% of the Dow. Caterpillar down 3%. And the reason there, well, we've talked about it many times, you and I, exposure to China and the trade war, and exactly how the Chinese will retaliate with non-tariff barriers against, say, for example, Boeing or Caterpillar. Look at the global markets, and you'll see exactly what a down day it was. Wherever we look in the world, tech stocks were no longer immune from what we saw. We'll talk about exactly how they were affected in a moment. There's the US markets. You've got the European bourses. The worst losses were there. We have Paris down 1.8%, but the FTSE was also up 1.5%. And the previous session, so really the day goes like that. Look down over at Asia, and Asia very sharply off in China, the Shanghai Composite, and also in Hong Kong. Those two were very sharply down, less so for Tokyo. Now, the three market risks sending investors running over all of this: Turkey, contagion from the current crisis, not only the crisis with the United States and tariffs, but also with the new tariffs from the US, but also from actually the economy itself, which today received a lifeline from Qatar. Then you've got the stronger dollar. Now, the stronger dollar is a result of a shift to safety. People are going back into the havens, and that's hitting commodities, resources, and all of those sort of stocks. Anything that is priced in dollars is starting to feel the push and pressure, if you like, of that higher currency. And finally, the tech concerns. Now, we had Tencent out of China with a very bad earnings miss, and worries over exactly new regulations on gaming restrictions by the Chinese authorities. Claire Sebastian is at the New York Stock Exchange. John Defterios is in Istanbul. We will start with you, Claire, with an overview of how important you think the Turkish contagion was in what we saw in the markets today.
Well, Richard, it's interesting because Turkey, yes, it's a very small economy, yes, less than $1 trillion, yes, the US isn't that exposed to it, certainly not nearly as much as Europe, but I think investors are wary of underestimating this. Don't forget, memories are quite long down here on Wall Street. People remember that it was the collapse of the Thai baht that led to the Asian financial crisis back in the late 90s. Maybe you remember that yourself. So I think people are wary of underestimating it. Plus, this adds to the broader kind of geopolitical landscape, the turmoil out there. Plus, don't forget, with the extra tariffs, the doubling of tariffs now from Turkey, this is yet another tit-for-tat trading relationship that the US has to add to its list. But I think Turkey to one side, that was the trigger today, as you said, a perfect storm. There are more fears about China that have resurfaced.
John Defterios in Istanbul, $15 billion from the Qataris, it was always going to be the Qataris, the Russians or the Chinese. But 15 billion won't go very far unless there's a change in economic policies.
A change of economic policy and a more aggressive trade stance yet again, Richard. I think that the friendship with Qatar came at the right time to help both the currency and give a lift here to sentiment. First and foremost, again, President Erdogan very aggressive on the trade front, targeting 5 core sectors, included even coal, which is near and dear to President Trump, and trying to revive that sector. He leaned to the east, showing he has partners bringing in Qatar. Yesterday, it was Russia. And then good old-fashioned intervention. The bank board stepped in today to limit short selling of the lira. It gave it a near 6% boost, bringing it to that key 6 level against the dollar here. It was intervention that made it happen, but it's up about 10% in the last 2 days of trading. So very important. But, Richard, to the point here, it doesn't solve the long-term problems for Turkey, the current account deficit and inflation at the same time.
Claire, the element of technology in today's rout, all the major tech stocks, at least earlier in the day, were down 2, 3, 4%. Again, the reason of Tencent, look at how they closed. Netflix off 3%, Google down 2%. You can see the numbers for yourself. They make somewhat sad reading if you're long on tech.
Yeah, absolutely, Richard. I think Tencent was pretty much the only trigger for this that we can find out there. This was an unwelcome surprise for Wall Street. This has been a company that has consistently beat expectations, plus the fact that this was largely down to the regulatory environment in China speaks to the role that the Chinese government can play in the fortunes of a single individual company. But I think, look, the tech stocks are the growth stocks out there, and in a broad-based decline like we saw today, they are also going to get hit.
John Defterios, finally to you, the question of emerging markets, not just Turkey per se, but whether it's the European in India, whether it's Southeast Asia, whether it's Latin America. I was reading from one note that said the emerging market ETF is down some 40-odd% this year. They're going to get, it could get extremely bad if and when the Fed raise rates further.
Yes, indeed. You make a key point here with the rising rates and the rising dollar putting pressure on these markets. Turkey is on the list, of course. You have Brazil, Indonesia, Russia. They're all quite vulnerable at this stage, Richard. And you have to bring back this narrative of contagion here, pushed along by Donald Trump. Look, he's been aggressive from Canada to China on trade. You have to expect at some point this is going to bubble up. I made the point earlier today. This is the quiet period in August. I think investors are going to wake up and say, look, this is too much to handle with vulnerable currencies while the Fed is tightening right now. This is the new reality.
Claire and John, thank you. To Anthony Chan, who joins me now from New York, chief economist at Chase, to put all of this into the wider... Good to have you, as always, Anthony. Thank you.
Good to see you.
Taking the time to join us. Now, look, this contagion that we keep talking about, where is it going? I mean, give me the examples of contagion and the sort of reasons that investors are using behind it.
Well, Richard, right now, the real concern is not so much directly the United States. You've seen the retail sales numbers were very strong. The Q2 GDP was very strong. But the concern is that somehow what's happening in Turkey can spill over into other emerging markets. We know that the European banks have some exposure to Turkey, but close to 25% of their revenues go into emerging markets. So that if emerging market contagion occurs, then all of a sudden it hurts the European banks, which in turn suggests that somehow Europe will have some difficulty navigating through the economic waters if their banks are impaired. And eventually that could spread over to the United States. But we do not think that's going to happen. We think that the base case is that cooler heads will prevail and a lot of the difficulties and tensions between Turkey and the U.S. will be resolved. But that was not on the minds of investors today.
Right, okay, but that contagion that you talked about obviously made worse if U.S. interest rates continue to go up, thus making U.S. assets more profitable and more valuable. But even if the current tensions between Turkey and the U.S. abate, that doesn't deal with Turkey's underlying economic difficulties.
But those difficulties, Richard, have been there for quite some time. We know that Turkey, for example, has about $180 billion worth of external debt that it has to basically roll over within the next 12 months. And we know that their foreign currency reserves are less than half of that. So there are real challenges there. And the currency, of course, has taken a hit. And when the currency drops by 50%, guess what? Servicing that debt basically becomes more challenging. It doubles the cost of servicing that debt. So these are all challenges. But again, given that Turkey makes up just about 1% or a little bit over 1% of global GDP, that's not a major number. It's important. It's the 17th largest economy in the world. But again, the concern is whether it spills over. And the concern is that with a strong, growing economy in the U.S., the Federal Reserve may either be unable or unwilling to slow down its gradual policy hikes, which in turn exacerbate the situation in emerging markets. That's the concern of investors.
Right, and taking the United States and taking the way forward for the United States, the economy is strong and robust, but the potential for that to weaken as a result of the trade disputes, whether with China or with Turkey, or well, perhaps not with Turkey, or certainly with the European Union. At what point does this trade spat or war have real economic suffering consequences?
I think we have some time, Richard, for that to happen. And I say that because coming off a 4.1% growth rate in the second quarter, the third quarter is probably going to give you something in the 3% range, maybe even more. So even if all of a sudden the trade tariffs that we've seen so far end up subtracting 1/4 or 0.5% off economic growth, we still have enough of a cushion that right now it's not an issue. The problem becomes when it starts to spread into other parts of the world, which in turn can come back to the U.S. But the first order effects on the U.S. economy, we're still doing well, which is the reason why it's been much more challenging to reach some sort of a compromise when you're bargaining from a position of strength.
Anthony Chan, very good of you to give us time. Thank you, sir. We much appreciate it. Thank you.
Pleasure.
As we continue tonight, we'll turn our attention to Genoa in Italy, where the government has very quickly got into the blame game as to who is responsible for the bridge collapsing, and the government not wasting any time pointing fingers. In a moment.